Hey, we're going to get rolling in here this week, and we're just going to get right to it and bring you a December continuous, a monthly corn chart. And what I really want to show you here on this chart is on the two red lines is I've got $5 and $9 on corn, and then I narrowed it up in here, and I think the range in here recently is more from 650 to 750. Our thinking as we move ahead in here right now is we can hold in this range in the near term, and then we're going to break out. And we're going to give you both sides in here on how we can break out. On the bullish side of it, you've got the little bit of late plantings in here. You've got the acreage debate going on. I'm thinking that the acreage could go down. You've got to throw weather in there. Then also look at crude oil, inflation, and you've got war. On the other hand, on the bearish side of it, we also need to mention weather, but our crop ratings are fairly strong to start the year. World prices, U.S. corn's a little more expensive compared to what South American offers are. And you've got the specs that are heavily net long, okay, in this market. Our other concern in here on corn is our gut is that producers have a little more old crop corn sitting in the bin that can get moved in here once we get through pollination. As we go to our next slide in here right now, this is just a December corn chart, and I took that blue line over and back into 650 to 750. And I know we traded a little bit above 750, but that seems to be pretty good resistance. And we're using 650 as support, as that's the price level we broke out at back in March. This next chart is the same as the previous one. All that we did, though, was change the range to match up on that monthly chart. And so when you look at this thing in here right now, yes, this is a dollar range right now, but in the big picture, we can easily move $1 to $2 outside of this range on a breakout. We think this is a real good chart to look at here. This is the 15-year seasonal on corn. If you'd like a copy of this chart, give us a call or drop us an email. And we want to point out here's our 15-year seasonal, tends to put our high in right now about the week of June 8th to June 15th. Now, if we think that the crop is about 2 weeks behind and that's the camp we're in, we could make a strong argument that you'd push the seasonal peak on this market back a couple of weeks. Okay, if we're going to get a breakout to the higher side, we think it needs to occur over the next 2 to 4 weeks. If we're not moving higher by the 4th of July, our fear is that this market could end up rolling lower. Now let's take a quick look at the bean market. Again, we've got an exceptionally wide range in here between $10.50 and $19. Maybe that high should have been near 18 back in 2012, but what I really did here was a 350 breakout on either direction. We're sitting right around 15.50 right now. Our lean is we need to get some bullish news in here if we're going to break out. I don't think that's going to occur in here right now, but time will tell. As we look to the next slide here, we've got the seasonal chart on November soybeans, and we want to quickly point out that the seasonal high on beans occurs well after the seasonal high on corn. Typically, it occurs in the July 8th to the July 15th time frame. Now, we mentioned how the corn seasonals could be delayed a little bit because of the later plantings. We really don't see that going on the bean side of it. We got to call bean planting progress actually fairly normal in here. And just this past week, you can see we caught up to the 5-year average. As we want to wrap up in here today, as we look at the corn market, I think the thing you got to walk away from right now is our seasonal highs coming about now. Push it ahead a little bit because of the late planting in here. On marketing some grain, maybe a good way to do it is to reward rallies in here, sell a little bit of grain over the next couple of weeks, 3-4 weeks, let's say. Our thinking is price protection needs to be in place by the 4th of July. If we're not breaking out to the higher side by then based off of weather, our thinking is that we probably would roll a little bit lower then. Again, and we mentioned this before, our gut is that there's a little more old crop corn to be moved in the countryside than what the market thinks right now. And after we get past pollination, producers are going to have the attitude on, no matter where the price is at, I need to create some room for this new crop. As they get towards beans, it probably has a little more seasonal support, than the corn side of it. You got to respect where those highs are in place in here right now. I think in beans, maybe you can push your price protection back a little bit further. Okay, let's say mid-July time frame compared to that of the corn side of it, especially when we start looking at the seasonals. The one thing what we really strive to do, and whether this is on our weekly webinars, on our Sunday night opening calls, or in our daily advisory report is give you a balanced outlook on this market, give you both the bullish bias, the bearish bias, and it's our job to look at where our risks are at and how we can potentially manage that risk. We have to admit no one knows for sure on where these markets are going to go, but we do have information we can use to help us make a more informed decision. If you need anything else from us or have any suggestions, let us know. Have a great day.